Welcome everyone to this afternoon's webinar. On behalf of the National Transit Institute, thank you for participating. The National Transit Institute develops, promotes, and delivers training and education programs for the public transit industry in the United States. Today's webinar is NTD Reporting for Tribes Report Year 2020. We are pleased to have as our presenters today Bailey Krause and Eric Chadwell. Bailey Krause joined the NTD team in 2014. She is a graduate of Michigan State University and currently serves as the validation manager for the National Transit Database Rural Reporting Module. Eric Chadwell joined the NTD team in 2016. He is a graduate of the James Madison University and currently serves as a validation analyst for the Rural Reporting Module of the National Transit Database. Today's webinar will consist of a presentation of the materials, and you attendees have the ability to ask a question at any time by using the Q&A box. I know sometimes questions appear in the chat box, but it's much easier to keep track of in the Q&A box. We won't skip your questions, and if needed, you can have a record of any typed responses that happen during the course of the presentation after the fact if you need them. So that's why the Q&A box is important. If you don't see it, it should be an option on your Zoom control bar. Just if you don't see it, you might have to mouse down or whatever device you're on, make that appear, open it up as a little box, and then you can type your questions right in there. If you don't have a copy of the handouts, which were emailed to you or should have been emailed to you, once we get started, I will be placing a link so you can download the handouts in the chat box. I think that does it for housekeeping. I am now going to turn the presentation over to Bailey.
Excellent. Thank you, Lori. Also, thank you everyone for joining us today for the 2020 NTD Reporting for Tribes presentation. If you do have any questions as you go through the presentation, please feel free to use the Q&A feature as Lori mentioned. We do have a ton of items to cover, so we're going to kind of get right into it. We also might be going a little fast just because there is such a good amount of information we will be giving you today. But if you do have any questions or we don't get to you, your analyst will reach out to you or we will reach out to you after this presentation to make sure we do tie up any loose ends. All right, so here's the contact information for the National Transit Database. If at any point you require technical assistance while completing your report or accessing our published data products, please feel free to call or email the help desk line between 8 a.m. and 7 p.m. Eastern Time. I'd also suggest reaching out to your analyst first, and if after hours, reaching out to the help desk if you need to. Again, my name is Bailey Krause, and I'm joined here by Eric Chadwell, who will be presenting today. Our contact information is listed here if you do have those questions that I mentioned about the presentation, or you can go ahead and contact that assigned analyst that you should have heard from by now. Here's the agenda for this afternoon. First, we're going to go ahead and do a quick overview of the NTD, then move on to important changes and clarifications for report year 2020. Then we'll review the fundamentals of NTD reporting, briefly review some interface changes, and then go on to the kickoff and how to complete the annual report, including some, common reporting challenges that you may have seen prior, or if you're brand new that you may see this year. And then lastly, we'll go ahead and go over how to submit your report and the closeout and validation process. First, that quick overview of the National Transit Database. So what is the National Transit Database, or NTD? NTD was established to be the nation's primary source of information and statistics on all public transit modes in the U.S. It's a source of data for performance measures and benchmarking as well as research. So the data is going somewhere. Recipients and subrecipients of Chapter 53 funds do report to the NTD, and reporters may include that those that are receiving funds in the past are still required to report based on continuing grant requirements, or those that may wish to receive future allocation or funding in the future, and they could report voluntarily. So we do have both in the system. 5311 subrecipients and recipients are required to report to the NTD due to grant requirements as stated here from legislation, so that 5335. All right, so data from the NTD, as I mentioned earlier, is used for several things. Some examples will include performance benchmarking, research and statistics programs, formula apportionments of funding, which is pretty big, and reports for Congress as seen here. NTD data is due on the following dates, October 31st, January 31st, and April 30th, and this will depend on your agency's fiscal year end date. Those are coded in the system, so if you're finding that your fiscal year end date isn't really aligning with what it is, please let your analyst know so we can get that corrected. These deadlines are closely monitored, and if you do have any questions on when to report, please reach out to your analyst. So the one that we're approaching right now is October 31st. Not a whole lot of reporters in the tribal universe that report to that due date. We're seeing more in the January 31st bucket. All right. So now we're going to go into the changes and clarifications from Report Year 2020 that may affect your report. First, I'm going to discuss the federal apportionment for FY 2021 and FY 2022 in COVID-19. So for FY 2021, FTA will use the data from the 2019 report year as normal to apportion funds. So it's the data that you've already reported. Since COVID-19 didn't really affect the data that you may have reported for the 2019 fiscal year. However, for the 2022 apportionment, which is based on the report year 2020 data, FTA will automatically hold all agencies harmless since your data from 2020 was or may have been affected by COVID-19. You will not need to be held harmless. This will automatically be implemented, and FTA will use data from the 2019 report year in the apportionment unless your agency requests otherwise. You can ask this question during your validation process if you don't quite understand what I'm talking about, but basically this should be a very seamless process this year. With COVID-19, we do understand that many agencies may have been providing additional services such as emergency services or non-passenger services such as meal delivery. Emergency services or response to a disaster do not meet the FTA definition of public transportation and are not reportable. So the service itself is not reportable. Non-passenger services such as meal delivery also do not meet the FTA definition for public transportation and should not be included on the NTD report. So basically the service for these should not be included, such as the miles and hours, because there are no passengers. Meal delivery, meals aren't a passenger. In the event that your agency did receive Coronavirus Aid, Relief and Economic Securities Act funds, or CARES Act, you will need to report these as a separate item on the RR20 form, and then this will be in the federal funding section to report these funds. However, you may not need to include them in your operating expenses breakdown due to it not really being tied to a mode itself. So if it's something extra like masks or additional cleaning resources, etc., those may not be going into your expenses, but they'll go into your funding, and we'll kind of go into that a little bit more in a couple slides. For any fleets added to your agency's transit service during the year, the seating capacity should be reported as normal operating standards. So pre-COVID-19, you should not update any seating capacities to reflect that temporary changes that you may have made in capacity due to the pandemic. So seating capacity as is. Okay. Any Medicaid funding, so this is a clarification for this year, any Medicaid funding of non-emergency medical transportation or NEMT services should be reported as organization-paid fares. Previously, these funds may have been reported under the state funds or other federal funds, so that would just be depending on the original source, but now just put them in org-paid fares depending on what mode they were paid for. For financial reporting, agencies are required to report the final source of funds used to pay for the cost of an expense. So with that, you should not be reporting the interim financing mechanism. So that's usually typically local funds that you may use. In the event that your agency has a pre-awarded authority for an FTA grant, you should report the expenses as that particular FTA grant, even if the reimbursement has not been completed yet. So it may have not hit your books yet, but you were either pre-awarded or your promised money you want to report it as that funding. So the new thing for 2020 is 2 new types of services are being introduced to NTD. So the existing ones were directly operated or DO in purchase transportation, general or PT. So now in addition to that, there are purchase transportation taxi or TX in purchase transportation network company or TN, or that's in the system, but I may refer to it as a TNC. So purchase transportation types of services are now determined by the type of entity under that contract. All right, so next is that clarification on transportation network companies or TNCs. So if you are reporting to the NTD and contracting with an TNC or on-demand service and that service is considered public, you will include that data for the service in the NTD report. So as mentioned on the slides, the contract between your agency and the TNC must meet the criteria for purchase transportation as defined by the policy manual. And we're going to go over what public transportation means as well as purchase transportation in a few moments. Just want to give you the outline of that. All right. So the TN or TNC type of service is a service provided by a TNC on behalf of a public transportation agency. The service must meet requirements for purchase transportation and be open to the public. So agencies reporting this mode may be asked for additional questions about the service as needed. Usually point us to the website, see where it's been advertised, etc. Just kind of get a little bit more information. The TX or taxi type of service is purchase transportation service provided by a taxi company. So last year it would have been like a DTBT mode, but now it's just going to be captured as DRTX with the new type of service requirements. If you did have a DTPT last year, you will automatically have that data transported into the DRTX type of service for report year 2020, so the assets will even pre-populate for you if you do have that mode in there. Demand response taxi services are those operated by a commercial taxi company for a public transportation agency. In cases where an agency contracts with a taxi provider to perform ADA services using dedicated vehicles, the portion with the dedicated vehicles should be reported and continue to be reported as DRPT, and the portion that are using those non-dedicated vehicles should be reported as DRTX. And when I'm saying dedicated or non-dedicated, dedicated are those that are just being used by the agency to perform the services for which you are paying for, and then the non-dedicated vehicles they can be using for your services as well as someone else's services or their own services. As a reminder, pilot programs are not considered public transit and should not be reported to the NTD. Public transit must be regular and continuing to be reportable to the NTD, and therefore the pilot programs that you see in ad hoc services do not qualify. However, if there is something that you're not quite sure whether or not it should be reported, just reach out to your analyst to kind of talk it through to make sure whether the reportability of it. So that's it for the new clarifications for this year. We're going to go ahead and jump into a review of NTD fundamentals. We're going to be covering modes, the types of services in a little bit more detail, revenue service definitions, and an overview of financial information. All right, so when reporting to NTD, the service must be public. I think I've mentioned that many, many times. Once that is determined, the mode comes next. So here on this slide are the most common modes in the rural module, in tribes, etc. So these are the demand response and bus modes. Bus service is powered by a motor and fuel contained within a vehicle. It includes those that have route deviation, point deviation, or deviated fixed route. Demand response service is defined as a service scheduled in response to calls from passengers. The dial-a-ride. A dial-a-ride is a demand response. Exactly. Another popular mode in the rural module is the commuter bus mode. We do receive many questions on what is considered commuter bus versus a regular bus mode. To clarify, commuter buses operate with more than 5 miles of closed-door service, and the same type of vehicles are consistently operated on the service. If you think that you have both a bus and commuter bus service, please keep in mind that the vehicles shouldn't be used between the services on the same day, and this would also apply to the driver's work assignments, which are typically separate. If you are currently reporting both commuter bus and bus service and you believe you may only need to report one mode, please contact your analyst for assistance, and we can kind of help determine how it should be reported and provide steps on how to change this in the reporting system if appropriate. The next topic we'll cover is types of service. So currently in the NTD, there are those two main types of service, directly operated and purchase transportation. Directly operated service is when the Service is operated by the agency and uses the agency's employees. Purchase transportation is when the vehicles are operated by the seller's employees. The service is branded as the buyer's, and the buyer is paying the full cost of the service. As I mentioned earlier in the presentation, there are two new types of service for purchase transportation category, which are TX and TN, or TNC. If the service is operated by a contractor that is neither a taxi provider nor a TNC, the type of service would just remain PT, or purchase transportation. All right, so after the mode and type of service is determined, the next question is, what data should you be collecting for these services? Here are some of the data points as well as abbreviations that are used throughout the presentation and on the report. These data points are collected on a per mode and type of service basis, except for sponsored unlinked passenger trips, which is only collected by the demand response mode types. There are common acronyms you'll see throughout the NTD materials, so just when I'm talking VRM, VRH, VOMS, UPT, SUPT, I usually just say sponsored UPT. It's a little, it rolls off the tongue a little better. But those are the ones I will be talking about at length. We'll first cover vehicle revenue miles, or VRM, and vehicle revenue hours, or VRH. We'll talk a lot about revenue service, so what does revenue service mean? It means that the vehicles are transporting passengers or are able to transport passengers, so this would include any layover and recovery time. Revenue service does not include deadhead, driver training, school bus or charter services, and vehicle maintenance. So I just mentioned deadhead. What is deadhead? Deadhead is not reported in the revenue service, so this would include leaving or returning to the garage or yard facility, changing routes, or when there is no expectation of carrying passengers. There are detailed tables found in the NTD policy manual which provide further examples of what is and is not considered revenue service, and we'll go ahead and review a couple of those next. Here is an example for the demand response mode and what is not considered revenue service. Please note that the times and miles from when the vehicle is dispatched from the garage to pick up a passenger are not considered revenue service until they reach the pickup point. In addition, the time and miles from the last drop off back to the dispatching point is also not considered revenue service. Following up on the previous slide, this is a rundown on what is and is not considered revenue service for bus mode. Again, from the garage to the first stop of the route is not considered revenue service, and from the last drop-off point to back to the garage is not revenue service. Both of these tables are found in the policy manual. Unlinked passenger trips should represent the number of passenger boardings during the reporting period. Passengers are counted each time they board the vehicle, no matter how many vehicles they use from their origin to their destination. When reporting unlinked passenger trips, please include all passengers. These passengers are usually classified as regular or sponsored. When reporting the UPT on the RR20 form, the unlinked passenger trip number should include both the passenger trips of like regular non-sponsored as well as the sponsored trips. So for the demand response, you'll report those sponsored trips as a subset of the total. So sponsored trips should be less than or equal to the total UPT reported. Sponsored trips are those that are paid for in part or in full by a third party. These may be part of a coordinated human services transportation plan. Common sponsors do include the VA, Medicare, and assisted living centers. As mentioned on the last slide, that sponsored UPT should be reported as a subset of the total UPT on the RR20. We do see this year over year, so that's the only reason why I'm mentioning it twice. So next, VOMS. So vehicles operated on annual maximum service are the number of vehicles an agency operates to meet the annual maximum service requirement. VOMS are counted at the peak season of the year on the busiest day, but you're going to want to make sure to exclude any atypical days or special events. The count should include any volunteer vehicles that you may have or use that were used in that maximum service time. It should not be the number of active vehicles that your agency has in service, but rather how many vehicles are used at once during peak service. There will be some times, don't get me wrong, that you will use all your vehicles that you have available to you, but that might not be you. So if you have 10, you're using 10, you might use all 10. But if you have 30 and you're using 25, you should only report that 25 that you're using on that peak service day. Another important definition for NTD reporting is Accrual accounting. So NTD reporting requirements for financial data generally follow the generally accepted accounting principles, or GAAP. In accrual accounting, if there are conflicts between GAAP and the NTD reporting instructions and requirements, please make sure to follow the NTD rules. In accrual accounting, the revenue is recorded when earned, regardless of when payment is received, and expenses are recorded when the liability occurs, regardless of when the payment is made. Please see the examples here in the policy manual for a little bit more detail on those. Next, we're going to review the types of expenses. First up is operating expenses. Operating expenses are the day-to-day expenses that a transit agency incurs. These may be for operating and maintaining vehicles, maintaining other equipment, planning costs, admin costs, as well as the other examples seen here. Capital expenses are those related to the purchase of equipment. Equipment means an article of non-expendable personal property having a useful life of more than 1 year. The equipment will have an acquisition cost which equals the lesser of the capitalization level established by the government unit for financial statement purposes, or $5,000 as determined by FTA. Lastly, we're going to go ahead and cover capital assistance spent on operations. So this is when capital funding is spent on activities that are normally considered operating, such as preventative maintenance and the purchase of tires. Please make sure to break this out of your other operating funding, as this has a different match percentage. There is a separate field on the RR20 form for the certain funding types, such as 5311 and 5310 for these. If your agency has more than 2 modes, the operating costs must be broken out between the modes. This is usually based on the direct and shared expenses. So once the direct expenses for each mode are identified and broken out, the remaining shared expenses may be allocated between the modes based on an allocation method. Please note that this is only acceptable for shared expenses. There should be some expenses that are direct to each mode, so don't go through and just allocate the entire thing. Attempt to pull out direct expenses and then allocate what you can't. When reporting your data to the NTD, you will report the funding you spent, not the amount your agency was recorded. So here on the slide is an example of this. If your agency was awarded $275,000, but you only spent $178,000, you would report that $178,000 on the form instead of the $275,000 of which was awarded. I apologize. Okay, on to assets. So here is the TAM plan phase-in schedule. As you can see here, we're going into RY20. That means that you should have at least 75% of the applicable condition assessments reported, and your narrative report must be submitted again with this year's report. It is a yearly requirement, and that will be on the A90. With talking about assets, we are going to mention capital responsibility multiple times throughout the presentation with regards to the asset module. Please see here for a list to determine whether or not your agency has direct capital responsibility for an asset. As a note, for the third bullet, an infrastructure asset itemized as a capital line item in the budget does not necessarily mean an agency has direct capital responsibility. The agency must also have management or oversight responsibilities for the line item project. In addition, performing minimal preventative maintenance work doesn't necessarily indicate direct capital responsibility. Okay, please see here for a list of the key reference documents for NTD report. Included are the glossary and annual reporting user guide, as well as the Uniform System of Accounts, or USOA, that was updated in 2018. There are additional resources related to COVID and TAM, as well as a link at the bottom of the page. Please use these if you do have questions. You can Control F. What I was talking about earlier about not necessarily including all the COVID funding in your expenses by mode and type of service breakdown, that's going to be in that COVID-19 reporting guide and FAQ. There are multiple sections about it, so just read through, see what applies to you, see what doesn't apply to you, and of course your analyst and the help desk is always there for you as well. Okay, next we're going to go ahead and review that NTD interface in account user management. The NTD homepage is found at the www.transit.dot.gov/NTD. This is where the data products, policy manuals, and clickable link to go to the reporting system, among other items, are housed. After After logging in and following the login instructions, which I'll go over in a moment, all users will land on the new homepage. The Acqueon platform, which houses NTD and TRAMS, recently deployed a new landing page. Here you will select the NTD in order to access your report. If you would like to automatically go to the NTD site every time you log in, you can go ahead and click on the star at the top right-hand corner of the NTD box, and that will save your preference. The new NTD homepage now allows users to directly access the NTD report from the front page instead of having to go through records and all that line. You will no longer see the newsfeed when you do log in as you have in previous years. Next is the Tasks tab. The section was updated with the new layout, but it will still house your important tasks such as your report year kickoff, incomplete forms, or incomplete submissions. To access your report packages, you want to ensure that you're on that home page. From here, you will select the Annual tab, and it will populate any open NTD reports you have for your agency. You will see your package, and you'll want to click on the FY 2020 version. You can access the forms one of two ways. You can either click on the NTD ID with the folder icon on the left, which will direct you to the report package summary page. This route will allow you to access related actions for the package, which include requests in the report submission link. If you'd only like to edit the forms, you can click on the pencil icon on the right-hand side of the page, and the system will take you directly to the clickable list of forms to edit. To access the reporter profiles, you'll still want to ensure you're on the home page or tab, but instead of clicking Annual, you'll select Profile, and your agency's profile will load. The profile is where you are going to want to edit your mode, agency basic information, as well as view users from your agency. These forms are the ones that usually don't change year to year, so you may not even need to go into the profile. But to view the individual forms, you'll click on the pencil icon on the right-hand side of the page, which will allow you to access those forms directly, or to open all the options, you're going to click on the NTD folder with the icon on the left. Once you click on the NTD ID folder icon on the left, you will see the profile summary page, and as you have in previous years, and here you can go through related actions to edit those P forms that I just mentioned. Next over is the e-file library, which is located in the profile. This is where you're going to filter through communications from prior years as well as the current report year, and you can view your closeout letters, for example, through this area. Going in order, the form library is where you can see data from previous years that has been submitted to NTD. You can use the drop-down to select the package and then the link in blue for whichever form you want, and then these will be downloaded in an HTML format. In addition to reviewing the forms under related actions profile, you'll be able to print the prior year's complete report package in full rather than by form. Other actions you complete is viewing and editing those P forms I mentioned. And that's really about it. So there's a couple things in there. If you do choose to print that annual package, you'll be taken to a new page where you'll click on the refresh button until the link comes up for you to download that file. Once the file is ready, you can click refresh and you'll be redirected to the previous page, and here on the slide you can see that the third, or near the red arrow, the downloadable file link will appear after it populates. So it kind of is a little hidden. It's not really in your face that that's exactly what you need to click on, but we want to make sure we pointed it out for you. Okay. Next I'll cover those users and user management. So to access the system, you need to be a user. To add users, each agency must have a user manager. A user manager may edit and add other users and may also fill NTD roles such as CEO and NTD contact. The most important users to have on your account will be that CEO and NTD contact. The CEO can be the director or the CEO of the agency and will be the one submitting the original submission of the report, and the NTD contact will be the main point of contact for the analyst to reach out to. After the first submission, the NTD contact may submit any subsequent revisions the report may need. Agencies may have an unlimited amount of editors and viewers, but there can only be one CEO and one NTD contact user. Okay, say you forgot your password. To reset your password, you'll go through the reporting homepage and click on Forget Password, and then fill out your username, which will be your full email address, all lowercase. You will receive an email with a link that is active for only 15 minutes. Upon clicking on that link, you'll be able to reset your password. If you kind of forget that you did it, you can go back in, submit, or try to get your password again. That's fine. If you keep forgetting, it will allow you to keep sending yourself that email. If you are already a user in the system and need to unlock your account, there are 2 different ways to complete this. You can either unlock your own account if you have set up security questions, which we'll go over on the next slide, or you can submit an unlock request. If you do submit an unlock request, the request will go to the user managers on the profile. If you are the user manager, it will either go to the other user manager if you have one, or the NTD team for processing. It is important to note that even if you are locked out, you can still log into the NTD system. However, the reports will not be available until you are unlocked using the options above. So say you're logging in and you're like, hey, I can't see my profile, I can't see my packages. You're probably locked out, and there you go. That's how you unlock yourself. As I mentioned, if you did set up your security question beforehand, you'll be able to unlock yourself. To set up your questions, you can go to the top right-hand corner of your screen after logging in and select Profile, then Related Actions, and Manage Security Questions. From there, you'll be able to follow the steps to set them up. After you have your users ready and you're ready to start the reporting process, the kickoff is the next step. This step sets up the packages the package that you will report on for report year 2020. To start, the CEO delegate, and the NTD contact will have access to this task after the tribe's fiscal year has ended. That user will select the task from the task menu, then accept and proceed. The next step is to verify the agency's users. You can review this information and ask your user manager to update what is necessary after the kickoff is complete, as only the UM has the privileges to add or remove users on the account. But it's a good time just to review it if you need to. After clicking continue on the previous page, you will confirm your modes. This will either be the ones that you have reported on in the past, or if you need to, you can add new modes at this time. As a reminder, do not report or do not enter an end date to a mode if the mode has not stopped operating. That will change your forms, and that will warrant a call from your analyst saying, what happened? So don't put an end date unless it's completely stopped. The next step is managing your transit asset management sponsor. If your state is your sponsor, you will select them. If you do not have a sponsor, you will click on continue and leave it blank. So this is what it will look like if you did not select a sponsor last year. This is where you could select one again if you needed to, or you can leave the sponsor area blank and then just keep on continuing. The next step is to confirm your reporter type for the current report year. So this should be pre-filled as seen here, and you're just going to go ahead and click on continue to go to the next step. You're still a small system reporter. You're still, rural. You're good to go. This one, it looks a lot like the last form. However, this is for next year. So this is saying next year you're not going to change either. Everything's the same. You're not going to have to do monthly ridership. You're still the same entity you were before. The last step is clicking on continue and then OK. After you click on OK, you'll be notified that the report year kickoff is being completed and your forms are generating. This could take some time as the packages are populating one by one. The forms are populating, and also there may be other people kicking off, so just please be patient with it. After you complete the kickoff and the forms are generated, you're ready to go. It's time to get in that package to start filling out your data. We're going to go ahead now and get into how to access your forms and what forms you'll see. And then I'm going to transit it over, give it over to Eric so he can kind of fill you in on the rest. From the home page, you're going to select your agency's fiscal year 2020 report. You're going to click on that blue NTD with the folder icon to access the summary page, or again, if you just want to edit the forms, you can select the pencil on the right-hand side of the page. If you select the NTD ID with the folder icon, you will land on the summary page. This is like last year, where you can see the related actions at the top and the annual forms and view issue buttons. To access the editable forms, you'll go ahead and click on the annual forms in the top right-hand corner. From there, the page will reload and the form names will appear in blue. You'll want to click into each form to edit them. These are the general forms that a travel agency will report on, and of which Eric will be going over in a moment's time. They are separated by types of forms. Basic information will be B forms. Asset forms will start with the letter A. Then the reduced reporting form, which has the service, financial, and safety data, is called the RR20. And then the last two forms are more or less summary forms and the certification form. So I'm going to go ahead and turn it over to Eric now to go over what each form contains and details on how to fill them out.
All right, thanks, Bailey. So the first form we're going to be discussing today is the Basic Information B10 form. The first section of this form is the general information for your agency. You want to please make sure that your organization type is correctly selected as tribe, and you answer if you receive or benefit from 5307 urbanized area funds. This is going to typically be no, but please contact your analyst for further assistance if you do select yes for this. Second is your demographic information. Please make sure your primary UZA is correct, which is the primary state your service runs, and select your secondary UZA if you operate in more than one state or also serve an urbanized area. Next is your tribal demographic information. If you reported in the prior year, this is going to automatically populate with your tribal area. So please make sure this is correct and or add any additional areas that you do service. If this is your first year reporting, you'll just start typing the area and it should fill itself in. And if for some reason you do not see your area, please contact your analyst. The bottom two sections of this form typically don't apply to most tribes. So please do not update the separate assets section unless another agency reports your agency's assets, and do not update modes filing a separate NTD report unless you are paying for a separate service not in your report. If you have any questions regarding a situation where this may be the case or want to discuss that further, and just discuss that with your analyst. And the next form we're going to be discussing is the B30 contractual relationships form. The B30 form captures information for purchase transportation contracts with other agencies. It identifies specifics of the contract as well as some basic financial information regarding the contract details. Note that NTD has strict requirements for what constitutes purchase transportation, and the buyer will report this information if it meets the following criteria. The buyer pays 100% of the full cost to provide the service. The service must operate in the name of the buyer, meaning it must be branded as the entity paying for the service. And the seller must operate and manage the service on the buyer's behalf. The first step is selecting whether the B30 is with another agency who reports to NTD or a private company. If you select NTD Reporter, you will select the agency from a list generated from our database. Next, indicate if your agency buys a service or operates a service. Next, you will indicate what type of contract this is, whether it is a competitively bid, negotiated, or is subsidized. This should indicate the first time the contract was awarded, even if it's been renewed. For example, if this originally was a competitively bid agreement and then later negotiated in subsequent years, it should be reported as competitively bid. Next, you're going to report the primary feature of the contract, which shows how the buyer compensates the seller. Do they pay the seller a negotiated fixed rate or reimburses the net operating expenses based on an approved budget? We will then indicate whether the service is data associated with the contracted service is captured in your report or another NTD report. Then we will select who retains the fares, whether the seller of the service keeps the revenue or they return the fares to the buyer. On the right-hand side of the screen, select the applicable boxes for any public assets provided in this agreement. Indicate what assets the buyer provides to the seller, if there are any at all. The next section on this form deals with the key financial and operation statistics. You'll begin by selecting the Add New Mode and Type of Service option at the top, shown here on the slide. Then you'll select the appropriate mode or modes for the contracted service, shown by the middle box, and then select the Edit option, shown by the arrow, to enter the data for this agreement, as shown at the bottom box of the screen. You'll complete the data as applicable as shown here, And if you have any questions about these elements, please refer to the policy manual or contact your analyst. Once the form is completed, you'll select Save and Validate. And if for any reason the contract is terminated, you can remove the B30 form by selecting Remove Contractual Relationship. Some tribes have relationships with the transit provider where the tribes contribute an annual subsidy amount for the provider to extend its service into its tribal area. The tribe does not pay a full cost of service and does not operate or purchase other modes. If this situation applies, you would select Subsidized under the contract type on the B30 form. For example here, a tribe pays a local transit provider a fixed amount per year to operate a bus route extension. The provider adds multiple stops along one route to service the tribal area. The buses are branded as and managed by the provider. So in this case, the tribe is not covering the full cost of the service and it would be reported as a subsidy. The second example is a tribe contracting with a private company to operate demand response service. The tribe covers the full cost of operations, brands the vehicles as tribal transit, and manages all scheduling and dispatching operations. In this case here, this meets the criteria for a full cost contract and will need to report the service as a purchase transportation agreement. Up next, we're going to be discussing the A10 Stations and Maintenance Facilities form. The A10 form represents your agency's passenger stations and maintenance facilities. For fixed route modes such as motor bus, a passenger station section will appear at the top. Report the number of ADA accessible and non-accessible stations and the total number of escalators and elevators. Please note that passenger stations must be a significant structure and a separate right-of-way and typically include ticketing, restrooms, concessions, or some sort of information desk. Bus stops or bus shelters do not constitute a passenger station. The next portion of this form, you will report the type and number of maintenance facilities utilized for your public transit service, and these are reported based on the capacity and ownership types of those maintenance facilities. The definition of a maintenance facility is a garage or building where mechanics perform routine maintenance and repairs and typically service as an operating garage. Please note that this will not include bus barns in this count and any third-party facility where you would take your vehicle to go get worked on, much like a Jiffy Lube. If one facility is shared by two or more modes, you will report a prorated share between the modes involved. This could be based on any point that is reflective of how much of the facility is used per mode, but one of the most common approaches seen is based on the number of vehicles that it services. For this example, an agency owns one facility and operates a demand response and fixed route bus service. Both modes share the facility and they own 10 total vehicles. The fixed route bus mode runs 4 vehicles and the demand response mode runs 6 vehicles. In this example, we would expect to see 0.4 reported for the bus mode and 0.6 in the demand response mode. Lastly, please make sure that the total number of your facilities reported between all of your A10 forms equals a whole number. Next, we have the A15 Facilities Inventory. The A15 form collects basic information on facilities that are used to supply the public transit service. If your agency does not have any facilities, the form will need to be saved and validated as blank to indicate so. So on this form, you will report administrative and maintenance facilities for which you have capital responsibility for. However, you will report passenger and parking facilities regardless of your capital responsibility. Please note that if an agency has an owned maintenance facility on the A10 form, we would expect them to have a facility entered on this form as well. To fill out the A15, you will first click on the Add New button, and then you will select the Add Facility link shown by the red arrow here. This will allow you to enter data for the facility, You will complete 3 sections that require information in regards to the facility information, the condition assessment, and the address of the facility. Up next, we have the A30 form, which is where you all report the revenue vehicle inventory categorized in fleets. If you completed this form last year, the 2019 data will pre-populate. You only need to report new fleets or edit existing fleets. And you can enter new fleets by clicking the Add New Fleet button, or you can edit an existing fleet by clicking the Edit Existing Fleet button. While adding a new fleet, you will fill out all required information. If you have 2 or more vehicles that are exactly identical across all characteristics, you will group these vehicles into fleets. And then after all information is entered, you will select Save and Validate. One common question we receive during filling out the A30 form is what the difference is between active and inactive vehicles. Transit agencies must report the number of active vehicles in the fleet at the end of the fiscal year, and these active vehicles provide regular service and include spare vehicles. With that being said, inactive vehicles are awaiting sale or disposal, are in storage, are a part of an FTA-approved emergency contingency plan, or they're out for long-term major repairs. Following up on the previous slide, please remember to retire fleets that are no longer in service, rather than deleting them from the inventory in total. Fleets should only be deleted if they were added to the mode incorrectly. To retire a fleet, you will update the active vehicles to 0, and once that occurs, the question, "Is this fleet retired?" appears, and you will select yes, much like the picture shown on the slide here. Moving forward, we have the service vehicle inventory form, which is where we collect an inventory of all service vehicles used to indirectly deliver transit service. Agencies are required to report on fleets for which they have capital responsibility. And service vehicles include cars used for admin staff, transit police cars, and tow trucks. However, agencies should not report any sort of small forklift or a golf cart. If you need to add service vehicles, you will do so by selecting the Add New button for you to enter that information. As mentioned, this is where we collect service vehicles used to indirectly deliver transit service. So revenue vehicles that perform the actual transit service and transport passengers should be reported to the A30 form rather than to this form. If your agency does not have any service vehicles, the form will just be saved and validated to indicate so. If you reported service vehicles last year, they will pre-populate again this year in the form. And if you need to add any vehicles, you will select the Add Service Fleet item and insert the data appropriately. Service vehicle types include 3 sections: automobiles, which includes sedans and other vehicles up to and including station wagons; truck and other rubber tire vehicles, which are vehicles larger than a station wagon, which include vans, minivans, pickup trucks, and SUVs; and steel wheel vehicles, which typically service a rail mode and are a rare selection for tribes. So if you have any questions about that, just let us know and we'll work through which vehicle it should be categorized as. And if you do have more than one mode that the vehicle services, the primary mode listed should be the mode that the fleet vehicle services the most. The second and final section of the A35 is the financial area. It will report the estimated cost to replace the fleet, which should include the cumulative cost for the fleet, which is the most recent estimate to replace the asset. If you do not have a recent estimate, you can report the original cost of the asset or the insured value. If you do not have a recent estimate and do not know the insured value, you will report the original cost of the asset. So the year's dollars of estimated cost should represent the year that corresponds to the dollar value that you reported. The next form we're going to discuss is the A90 Transit Asset Management Performance Measure Targets. The A90 form is where an agency or an agency's group plan sponsor reports the portions of the assets that have met or exceeded the useful life benchmark of that asset. This will show your target reported last year, the current performance that is pulled from the current year asset forms, and a place where you report your target. For vehicles on the A30 and A35, the performance measure is determined by the useful life benchmark. And for the facilities, the A15, and for the facilities on the A15, the performance measure is determined by the condition assessment. Some agencies report their targets directly to NTD, and some are participants of a group plan sponsor who will report one A90 on behalf of all their participants. The first section is rolling stock, which deals with the revenue vehicles on the A30 form. A target should be reported for those vehicle types that you have a performance for, and NA should be selected in the case where there are no vehicles reported of that type. The equipment section refers to the service vehicles in the A35 form, and this is based on the 3 vehicle types reported of automobile, truck and other rubber tire vehicles, and steel wheel vehicles, and this section should be filled out the same way as the first. The third section contains the facility targets for the facilities listed in the A15 form. You will report the percentage for the number of facilities that rate at 3 or below on the scale. Lastly, you will upload your narrative report at the bottom like last year, as this is a yearly requirement. Agencies are required to upload a narrative report that outlines the targets your agency set in this form, the progress towards those targets, and any changes within the transit system. This will need to be uploaded and submitted with your annual report. Now we're going to go on to the reduced reporting RR20 form, which contains the highest volume of data in the NTD report. When you open the RR20 form, the total fund expended is at the top of this form, and this is a non-editable running total of the funding sources you're entering. This should match the total funds expended by mode and type of service that you manually enter as shown by the red circles here. But as Bailey mentioned earlier in the presentation, any COVID-19 special and extraordinary expenses like extra cleaning of the vehicles, installing cough guards to the vehicles, installing hand sanitizer stations, etc., should only be reported by the funding source and not by the mode at the top. If you do have any questions regarding that, you can either refer to the COVID-19 manual or just contact your analyst if you do have those questions. So moving forward with the form, agencies with more than one mode are required to capture and report actual expenses by mode and type of service and not allocate the total amount. If you have more than one mode, you will want to determine the expenses that are direct and can easily be traced to a specific mode, which may include driver wages or vehicle repairs. And for the remaining expenses that are joint, which are costs that are incurred for the benefit of more than one mode and cannot be traced, you can then allocate those remaining costs out. An example of this may be a transit manager's salary that helps support both the demand response and the fixed route service. So if that is the case, you can allocate those expenses by an allocation factor, such as one of the 4 listed here of vehicle revenue miles, online passenger trips, vehicle revenue hours, or the number of employees. The next section of the RR20 is where we report fare revenues. These fare revenues include all income received and expended directly from passengers, including donations made aboard the vehicle. The fare revenue are further broken down between passenger paid fares and organization paid fares. The passenger-paid fares are those that have traditionally been considered a passenger fare, where a person pays to come aboard the vehicle. And an organization-paid fare are those where an organization pays for or pays through a third party rather than the passenger paying themselves. And an example of this could be a university paying a local transit agency to allow their students to ride fare-free. And as a note, these Medicaid funds will be reported here for the first time this year. Much like the operating expenses, if you have more than one mode, you will be required to capture and report the fares by mode and type of service. Listed here are 2 exceptions to this rule, and if your agency is one of these exceptions, please make sure to explain the situation during validation so your analyst is aware of this for the year and for future years to note that down. But as mentioned, like operating expenses, we'll want to make sure these are actuals for each mode and type of service, not allocated. Going in order of the form here, these are some examples of other directly generated funds. In addition, this is where we report donations and insurance recoveries, along with non-full cost contracts. And if you do happen to insert a value here, make sure to explain the type of funding source that's being reported. Revenues accrued through a PT agreement will be reported if you receive revenues from another agency that pays for the full cost of a service you provide, as long as it meets the NTD definition of purchase transportation. Your analyst will probably discuss this situation further if you do report funds to this field. Below the directly generated funding section is a non-federal funding section. You will enter the data accordingly based on what funds came from local funds, state funds, and other non-federal sources. Local sources include tax levies, general funds, and finances from local entities. State sources include state programs that support public transit, but do not include Chapter 53 funds that a state may pass through. And much like other directly generated, if you report funds to the other funds field, please make sure to explain the type of funds that are being reported. The next section, you'll select all applicable federal funding sources from this list of programs. Once you do select a box, sub-programs of that source will populate to the right. For all tribal transit funds, please select the Formula Grants for Rural Areas box from the left-hand side as shown, and report those to the FTA Tribal Transit Funds 5311 field on the right. If you select any other fields, it will require a comment to describe that type of funding. Examples of other FTA funds will include those not listed already, such as Section 5308 FTA Clean Fuels Program funds. Examples of other federal funds may include HUD or any other non-FTA federal source, and other U.S. DOT funds will include funds from the Federal Highway Administration. For service data, the miles and hours reported should only include revenue service, which is when the vehicles are transporting passengers or able to transport passengers. This includes layover and recovery time, but does not include deadhead, driver training, school bus or charter services, and vehicle maintenance. Also note, when reporting unlinked passenger trips, passengers should be counted each time they board the vehicle, no matter how many vehicles they used from their origin to their destination, and that the total UPT should equal regular UPT plus sponsored UPT. After completing the revenue service section, the safety data is the last section of the RR20 form. Reportable incidents include fatalities, injuries, or property damage that exceeds $25,000, collisions involving revenue vehicles that require towing away from the scene for any vehicle involved, or an evacuation for life safety reasons. Fatalities are reported when the death occurs 30 days, within 30 days of the incident, and injuries are reported when a passenger is immediately transported away from the scene for medical attention. If your agency reports a tribal subsidy, meaning your agency subsidizes a local provider's service and does not directly operate or purchase a service, you will have a reduced RR20 form. You will not report service stats on this form, as this would be captured on the provider's report. You should only report the funds contributed to the provider for the service. And next we'll be discussing the federal funding allocation form. The FFA-10 form allows agencies to allocate their vehicle revenue miles between multiple rural areas and urbanized areas as necessary. Most tribes operate in only one rural area, so if this is the case, you would allocate 100% of the data to the area. If you operate in 2 rural areas, you will need to report the service performed in each. Reporting data by area is critical because this impacts the amount of funding FTA apportions to each area. So this is a layout of the FFA-10 form. The form will pull service data reported to the RR20. The first thing you will do here in this form is select your UZA reporting method. If you only operate within one state, select the actual vehicle revenue miles. And if you operate within more than one state, you can either select actual vehicle revenue miles or you can select actual data. And we'll discuss these methods here shortly. If you only report to one UZA or non-UZA, the total should always match the data from other forms column, which is the data in the RR20 as shown by the line here. If your data is in multiple areas, the allocated percentage should always be 100%. So if you enter data to the RR20 and then update the FFA-10 form, but then go back to change data on the RR20, we'll need to go back to the FFA-10 form to then update that again. And here lastly, we have the D10 form. The D10 form is the CEO certification form, which is pretty straightforward here. The CEO will attest that all data captured in the NTD report is accurate, truthful, and up to date. And you will also confirm your methods of collecting ridership by selecting the unlinked passenger trip data section. And here's that section. You will select the method that your agency used to collect UPT during the year from the drop-down menu, and then you will select Save and Validate when you've completed that. Up next, we're going to go through some common reporting challenges faced during the annual report. So there are different reporting challenges faced to the report year. These include understanding the NTD policies, completing the data entry correctly, completeness of the entire report, and the validation issues associated with the reported data. The main challenge stems from the validation that analysts send the report back for, and this occurs when analysts have questions about the data that was submitted. So with that being said, validation includes but is not limited to time series checks against data that was reported in the prior year, logic checks between data items on different forms of your report, and we check for values outside of the range for agencies with similar operating characteristics. So when these occur, Agencies can either revise the data to reflect correct and accurate information, or they can provide sufficient explanation to establish accuracy and even documentation if it's requested. Tribes who report to NTD indicate tribal areas serviced by their agency every year. The data point needs to be updated every year with the correct area. As such, since the third tier of the apportionment is based on this data entered. Some issues that may arise in this form are excluding areas that are served or adding areas that are not served. One issue, as mentioned before, deals with the allocation of operating expenses. Agencies should report expenses by mode and type of service. You will want to determine which expenses are direct and can easily be traced to a particular mode, and which expenses are shared and cannot be traced to a specific mode to then allocate. Another one we see is in regards to the year-to-year funding changes and making sure the funding sources used for public transit are reported in the correct lines on the RR20. We just want to make sure that all funds used to provide the public transit are reported and not just the federal sources that you're using. Also mentioned previously, agencies should only report service data for when they were performing revenue service. Revenue service does not include deadhead, therefore deadhead should not be included in the data that is reported to NTD. Deadhead is when transit vehicles are operating closed door and do not carry passengers, and this includes leaving or returning to the garage to or from the starting or ending point of revenue service, changing a route, or when the driver does not have the duty to carry passengers. We want to make sure to remove deadhead since VRM is an apportionment factor, and so we can have accurate performance indicators like revenue speed and cost per mile. VOMs, or vehicles operated in an annual maximum service, refer to the number of revenue vehicles an agency operates to meet the annual maximum service requirement. This includes volunteer vehicles during peak time, and it excludes any atypical days or one-time special events. This is not the total number of vehicles that are available to perform service, but the maximum number of vehicles that are used simultaneously. When reporting a new vehicle, it is typical that an agency will report the corresponding capital expense on the RR20 form. Capital expenses are related to purchasing a capital asset, like a vehicle, or making an improvement to a capital asset that increases its value or useful life. The expense should include the acquisition cost, the cost of delivery, installation, and any modifications. One issue that we do see is that agencies will report either the new vehicles or the capital expense, but not both. So if this is the case, a validation issue will probably be prompted for further clarification, which can be explained during validation. Additionally, please note that when you do add a vehicle and it is used for more than one mode, to report that capital expense to the mode that the vehicle is used most in, versus allocating that vehicle cost between modes. All agencies must inventory all vehicles that they use to provide public transit on their 830 form that have not been sold or disposed of at the end of the fiscal year. The inventory should essentially be a snapshot of the last day of the fiscal year, and the vehicles must be reported in the fiscal year when they become available for service. When completing the 890 form, you must report the next fiscal year performance targets for the assets you have capital responsibility for. The report will not be complete if there's not a target for an asset class that you have a performance for. Some common issues include reporting a current year target instead of the next year target and not reporting a realistic target percentage. For example, for the realistic target percentage, This could be where you report a target of 28% when an agency has 2 facilities. In that case, it would more than likely be a 0%, 50%, or 100%. So if that does occur, validation issue will probably be asked during the year. So after you have completed the report in full, we will then need to submit the report within the system. To submit the report, you will do this by clicking the Related Actions button from the report package summary page. Please note that only CEO or CEO delegates can submit the original submission or the first draft of the NTD report, and the NTD contact can submit any subsequent submission. When in Related Actions, you will then select the Submit Annual Report package. If all data is filled out and there are no issues preventing you from submitting, this page will appear and you will click Continue. The next page, you will click on the Submit button, which will submit the report. So after successfully submitting the report package, you will see a yellow notification box stating that the action has been completed successfully. If you do want to confirm that report package was completed successfully, please refer back to the report package summary page, and the report should be listed as in review rather than in working data. Once you submit the report, there are a couple more steps that need to be taken in order to completely close out the report for the year. The NTD analyst will review the entire report for accuracy and consistency. They will compare the data submitted this year to the data submitted last year for any significant changes, and ensure that all data reported to the correct field. Agencies can assist in the validation process by providing detailed responses about their operating environment or changes from the previous report year. Agencies should avoid stating vague, general responses like data is correct, and provide a thorough explanation for the change, which could include route changes, personnel changes, or any changes to the agency funding sources. Once the analyst has gone through the report, they will send it back to resolve the open issues. Each time this happens, the due date timetable is shortened, as there should be fewer issues each time. If you failed to correct any issues stated in the prior year closeout letter, they may be marked as questionable in the current validation year. The report package summary page shows the validation dashboard, which indicates how many open issues and total issues each form has. In this example shown here, the demand response A30 form has 6 open issues and 6 total issues. When in the report, there are 2 save options. One is to save and the other is to save and validate. The Save button simply retains the information and your progress within the form. And this can be used when you do not have all the information for a form and need to come back to it at a later time. The Save and Validate button should only be used when the form is completed and you are ready for the system to apply validation to the data. If you happen to save and validate, but later make changes to the data, you must save and validate again. If you save a form that has already been saved and validated, the form will revert from green, meaning validated, back to red, meaning not validated, and it will not turn green again until you save and validate the form. So there are 2 ways to view the issues for your report. One is to open the report form and navigate to the bottom of the page and select the View Issues button. And this will allow you to view the issues for just the form that you're on. The other option is to open your report package summary page and select the View Issues button at the top right. And this will provide you with all the issues for the entire report. To open an issue, you will select the issue line to highlight as shown by the screenshot here, And once doing so, further information will prompt below. So after you select that and scroll down, you will see a comment box that allows you to provide the explanation to the issue selected. Notes in a closeout letter typically relate to incomplete reports, which can mean either the data does not conform with NTD definitions, accounting principles, or it can mean that the agency did not adequately respond to validation raised by their analyst. All identified issues must be fully addressed in order for the issue to be resolved. If either of these issues do occur, the NTD will cite them in the closeout letter. The best way to resolve validation issues is to provide a thorough and detailed explanation to each issue prompted by the analyst. Explain why the data changed from year to year or what service changes took place to cause a shift in the data. If you do find that last year's data was wrong, please provide an explanation as to why it was wrong and why this year's data is correct and what it should have been last year. Please note that FTA will not accept this for multiple years. So that wraps up the presentation for today. Again, this is the contact information for the help desk that's open 8 a.m. to 7 p.m. Eastern Time, and the contact information for our team. And I believe we can open up for any questions that have not been addressed already.
Yes, that's correct. If anybody has any questions, please feel free to go ahead and type it in the Q&A box, and we'll get right to it. So we'll wait, see if anyone starts typing. Okay, so we have a question from Amy Hill. So we don't have to request a waiver to use the 2019 data this year. I was under the impression that there was a formal process to request it. Eric Bailey, I don't know if you're answering the question or not, but I can't hear you. I read it. I don't know if I was on mute because my husband's on the phone downstairs.
Sorry about that. I was
Okay.
muted, double muted. So yes, if your 2020 data was less than your 2019 data, you'll automatically be processed one.
Okay, thank you. Dawn asks, we report CARES received from our state DOT as CARES, C-A-R-E-S, correct? And not as 5311.
So it will be CARES, but it'll be 5311 with the subcategory of CARES if you received it from the state. If you received it as the tribe directly from FTA, then there will be a special subcategory. It's like the last one under the 5311 program, if you're looking at your R20 form.
There is something in the chat box from Christy. She said, thank you for clarifying what we will report for fiscal year 22 NTD. They were concerned about not having any ridership due to COVID. And this is the part that's a question, I think. It says, my understanding that we will also use fiscal 19 ridership for the fiscal 22 report. Thanks.
Okay, to clarify, we're talking about using report year 2019 data for the fiscal year 2022 apportionment. So yes, if that's what you are regarding, then yeah, that's exactly what we're talking about here.
Thanks. Anybody else? We'll wait a minute and see if anything comes in. Oh, Amy wants to know, how often are we required to update our TAM plans? I know we submit the narrative annually, but is this an annual update for the whole plan?
So the TAM plan is through the TAM office. That's every 4 years. Narrative report is annual, but it's not an annual update to the whole plan. It's just about your targets and how you're hitting your targets or you're not hitting your targets for the narrative report specifically.
Great. Anyone else? Dawn asks, if we purchase the bus this year but do not take delivery of the bus until next year, we report the expenditure this year and new asset next year, correct?
Yep, that is correct.
Okay, I guess I'll operate under the assumption that there are no more questions coming in. The email addresses were on the last slide, which should also be on the last page of the handouts. If you don't have the handouts, I had pasted the link in the chat box earlier. I can do so again if it's needed. Otherwise, I guess we'll wrap this up. So thank you to everyone for participating. Special thank you to Bailey and Eric, and I hope everyone got a lot out of their presentation. As a reminder, everyone will receive an email probably by tomorrow morning with a link to fill out an evaluation for this webinar. We really appreciate your feedback, and if you could just take a minute or two to fill that out, that would be great. Other than that, thank you everyone, and have a great afternoon, and be well.
Thank you, everyone.